Welcome back. Well, the market's holding in the green, but we have come off from the high point of the day. So we're up close to around 20 points. At the start of the day, we were up close to around 65 to around 70 points out. But let's get chatting with our next management. TTK Prestige, that's the stock on our radar post the earnings. Well, the company posted flattish revenues, gross margins, well, they held steady. But we want to understand what's demand on ground and how are things shaping up from here on. Well, we're joined by Mr. Jagannathan, the chairman of the company. Hi, Mr. Jagannathan. Always good hearing your thoughts, sir. Let's focus on a couple of segments. Online sales, I'm looking at some of your competition. They have been giving a decent amount of discounts. What about you? I think online sales is only around 12% of your business. And also give us a sense about export market. That's 5-6% odd. But when you joined us the last time around, you said you don't have enough capacity to cater to them. So, a comment on both these 2 points. Go ahead.
Can you repeat the question, please?
The first part, sir, on the online sales. The second part on the export markets. The capacities weren't, the capacity that you have, or you weren't able to fulfill the kind of export orders that you were getting. That was the sense we got last time.
Online sales is flattish. Nothing great. We don't allow big discounts on online because it disturbs the offline market. So we are careful, and it is flattish. As far as exports are concerned, you're right. We simply do not have the capacity to take on the orders that are flowing in. But we are correcting that situation. Over the period next 1 year, we will build the capacity.
Okay. Sir, in Q2, all your segments X of cookers saw a decline. Has that reversed? Can you tell us how each of your segments are doing in the current quarter?
Actually, that is a misstatement. Last year, Q2 was post-COVID.
Okay.
And we grew 55% over previous year. So comparing to Q2 with last year is wrong. You compare first half with last year and we've grown 21%.
Okay.
All right, Mr. Jagannathan, the last time we spoke, good morning, Prashant here, you had said that, the first 15-20 days in October were hit because of flooding in the northern, specific northern part. But you said things hopefully will pick up. But that was also, I think, the festive period, very important for sales, etc. Has that been made up now that we are wrapping up November?
It's become normal again.
Okay.
We are getting sales.
Okay. Will that? I mean, okay, you'll be able to make up for for lost sales.
That is very difficult to do always. But we're confident. We're growing. We're 21% ahead of last year. We believe we will end the year in double-digit growth. And that, considering the year, we should be happy.
Okay, double-digit growth for the year and margins in the vicinity of around 16%, right?
Which is correct.
Okay. You're sitting on a good amount of cash, sir. And,
yes,
periodically, whenever you join us, we ask you whether you're on the prowl. You hint at, yes, you could be on the prowl. But do you think in this fiscal, will you pick up a couple of assets or one asset that you're zeroing down on?
We are very, very careful as to what we want. And it is difficult. We're still on the prowl.
Okay. Always still on the prowl. So has there been a pickup in the entry-level segment?
No, that's still very tight.
That's still very tight.
But last you were on, you said that it's not doing badly. I remember I asked you, we had another representative from a company who actually had said that entry-level is doing is stagnant. You kind of pushed back and said, well, it's not doing too badly. Could you give a little more color how that is? Because that is a large proportion of your sales.
Not anymore. Now, a very large proportion of our sales is at the top end. Probably because the entry level has been flat.
Okay. So would you look to increase your ad spend, perhaps to try and invigorate this lower end of the market?
We have a policy that we spend 6.5% of sales on advertising. Okay. Where we target it, we change every year, but we don't change that number.
All right. And could you give us some color on the industry per se? Has the shift from unorganized to organized continued? What is the industry growing at? You said in the first half of the year, growth was a little more than 20%. What would the industry growth be at?
I don't have the current data on that because the data comes normally about 8 months later. But I believe that the unorganized players are still finding it tough to enter.
Okay.
Mr. Jagannathan, last you were on, you said that you were revamping the UK business. Of course, I mean, things have been bad there. Could you give us an update? What's happening?
Things have got from bad to worse. Last year it was merely bad. This year it is terrible.
Oh, God. And you'd said that you were basically sort of moving away from selling to retailers, trying to get to consumers directly. How are you sort of restructuring your business?
We now have 30% of our UK business going direct to consumer.
Okay.
But the market is really, UK economy has collapsed.
And there are no signs of recovery there. So are you cutting back on your inventory?
In the UK, yes.
In the UK, you are. What else are you trying to do, sir, to stem the losses or the weakness in the UK market as a strategy?
Well, like Prashant was saying, we go direct to consumer now.
Okay.
So that has improved a little bit, but it's difficult. UK market is very, very bad. It's difficult to really stimulate ourselves in that market.
So UK revenues versus pre-COVID, sir, how much would it be lower? Just to get a sense of how bad things are?
About 30%.
30%. Okay. And you also, just one final question. You had plans to launch 32 new SKUs in the current quarter. Is that on track? And are these all premium products?
We've already launched it. It is on track. We've already launched it, and they are all premium products.
Okay.
All right. Mr. Jagannathan, it's always a pleasure, sir. Thank you very much. Appreciate you joining in. And thanks once again for those insights. Appreciate it. Well, that's TTK Prestige with some perspective. The market's come off. We're down to being up just 10 points. Let me just take a quick look at the Nifty intraday. We'll tell you the story. So the day's high was made at, actually right after open, 9:20 or so was the day's high. From there, we've basically come off quite sharply. Just 5 points now. Even as we speak, things are getting more and more sober in that sense. On the in terms of contribution and what is really leading to this, if I can just take a quick look, Infosys is the number one name. So it's adding about 14 index point pressure downwards. There is Reliance, which has come off. It's adding about 10 points, 10 index points. And then there is TCS, HCL Tech, Tech Mahindra. It's all IT. So Rima will have some blame to take for
Nasdaq was the biggest loser amongst the indices in the US markets yesterday. So I guess that explains.
Yeah, absolutely. All right, we'll take a quick break here, I think. We'll come. All right, what we'll do is we will go across and speak with, we'll speak about the aviation space. So there is consolidation, which is now finally appearing on the horizon. Singapore Airlines and Tata Sons have decided to merge Air India and Vistara. The move will create a new giant in the aviation industry. So how will the combined entity stack up against the likes of Indigo and others? VR Mehta is former trustee Tata Sons and former director at Tata Motors. Devesh Agarwal is founder and editor at BangaloreAviation.com. And Mayur Malik is senior vice president research, auto and aviation at Asian Market Securities. Gentlemen, great to have all of you with us here. Appreciate your time. Mayur, if I can start with you. Okay, I think we'll have Mayur with us in just a bit. Devesh, what do you make of the announcement? It's been, I'm assuming, anticipated for a while. It's come through. What will it do for the combined efforts of the Tata Group to capture market share, and what does it mean for competitors like Indigo?
Hi, good morning. Thanks for having me. This is a kind of a bit of a mixed bag. You're right, it was sort of expected. There are benefits, of course, to the merger, consolidation, etc., route rationalization, all that. But I also would like to caution that, 18 years after Indian Airlines and Air India merged, there is still within that organization the mindset, oh, I'm an Indian Airlines person, I'm an Air India person. And now you're going to add the mix of Vistara. And Vistara, if you see in terms of its human capital, was a much younger team, and they had a different method of thinking. And going forward, how that the entire organizations may merge. It is the humans inside it that are going to drive the organization forward. The Tatas also, I think, to the best of my knowledge, they are already, it's in the works that they are going to sort of separate Air India Express and merge that with Air Asia India. So they are going to create a separate low-cost brand, and then this is going to, Air India itself would probably will remain as a full-service brand. It's not just an issue of market share. Everybody tends to focus on market share. Getting market share is not difficult. Market share in India doesn't assure profitability. Indian customers or Indian passengers are so price sensitive that, I mean, tomorrow, if Air India wants to catch up with Indigo in market share, they just reduce their fares in half. Trust me, they will be the market leader. So that is not, a market share is really, honest to God, not a good indication of, you can say, performance. Profitability is. And right now, I mean, it is going to cost both the Tatas and Singapore Airlines a significant amount of money. I mean, they're looking at an investment of upwards of $2 to $3 billion into Air India going forward.
Fair point, especially about just bring down the costs, bring down the airfares, and you're going to get market share. That's going to zoom. Mr. Mehta, you have an insight into the Tata Group. Can you tell us in this case, why is 1 + 1 an acquisition more than 2?
I think that is a very basic thing. A lot of synergies. There are a lot of activities which can be combined, and that is what synergy means. So now all the 4 merging entities have their different areas, different departments for doing the same thing. When you merge them, that is where you get the synergy. You're able to rationalize the workforce, and that really brings in cost effectiveness. This is a very big thing that happens when you merge. This is the basic principle when one of the basic principles when people try to have mergers. So I think that will come into play here also in a very big way. And the other thing is that with this, you see, I think the concerns that will require a lot of investments, those are very true. But the point is that the Tatas have the resources, and that's why they can make a success of it. If it was a smaller player, it would be difficult for them to bring in so much of money. Now with this, Singapore Airlines also coming on board, the merged entity, I think that will make it easier for both of them to go forward. So this is what is going to happen. And the other thing about the merger of the staff, that's always a thorny issue. But Tatas have been known to be having great skills in human relations. And they have had, examples of previous acquisitions and mergers where they've been able to smoothly have a merged entity, and all these problems of different backgrounds and different conditions and all have been solved to the satisfaction of all the stakeholders. So I think it may be a process which will take some time, but given the background of the Tatas, their reputation, their credibility, particularly for the staff, you see, the credibility issue is a very important thing. That if they say something, they'll do that, they'll carry forward with that, and everyone is on board from the senior management. So these are the things which will go in favor of this merger, making a success.
Right. Noted that point, Mr. Mehta. But let's get in Mr. Mayur Milap as well. Hi, Mayur. Tell us about the listed stocks. You're going to be having a far formidable player right now, and it could pose a bigger challenge. How would you approach the listed stocks?
Yeah, hi, morning. In fact, if you ask me, I think this is one of the best things to happen, even for the listed play. Now, go back pre-pandemic and you'll see that, even when crude was lower, the Indigo particularly, let's say, was making a spread, which is your difference between RASK and fuel CASK, about 2.2. Last 5 quarters, despite crude costs being so high, they managed to do this at 2.4. Clearly tells you that the Indian skies have seen much more discipline in pricing. And this is clearly possible because now you have a set of professionals who are running the Indian skies. Whether you call it the Tata team, whether it is Indigo, you now have Akasa coming in. So I think a lot has changed, and this is a change for good.
Mayur, sorry to interrupt you. We can't hear you very clearly, so we'll try and reconnect. In the meanwhile, Devesh, what impact is this going to have on the other players? Say a Spice Share, Interglobe Aviation, Akasa Air. You're on mute, sir.
My apologies. I don't know. Somehow that thing keeps getting muted. My sincere apologies. I was going to say that definitely we are heading into a kind of a duopoly where you will have Indigo on one side and you'll have, the Tata-controlled airlines on the other side. And so it is going to put significant pressure on SpiceJet, on Go First, and on Akasa. And honest to God, I don't see at least one of them surviving beyond, say, 2024. It might even happen in 2023. So there's definitely going to be further consolidation. There will be shakeout. Within the merger itself also, see, there are a lot of things that are left kind of unanswered. For instance, Air India doesn't have a premium economy class. Of course, they're going to have a premium economy class on those Delta 777s that they have leased, because Delta has, the business class, premium economy, and economy class. They don't have a first class. Vistara has got the premium economy, but Air India domestic does not have it. So what is going to happen? It's not just this is a lot of this thing. And also, if you look at it from a standpoint of frequent flyer, Air India is a full-fledged member of the Star Alliance. So their tie-in is, of course, with Singapore Airlines, Lufthansa, Air China, United, etc. Vistara, if you go and see, has been signing I wouldn't use kind of code share alliances with one world carriers, Japan Airlines, British Airways. What is going to happen to all these things? Obviously, being Air India being a member of Star Alliance will not be allowed to have a partnership or any kind of relationship, to the best of my knowledge, with any of the One World or non-Star Alliance carriers. So this merger has got a lot more to be, sort of a lot of things have to be put together by the Tatas themselves. But yes, this will be a good, formidable. I have been advocating that this is what the Tatas should be doing. Even about a year ago on CNBC, I said the same thing. Tata should take a low-cost brand, make a separate low-cost brand, make a separate full-cost brand, and then they need the scale to take on Indigo, because Indigo is without a doubt the 800-pound gorilla in the market. So it is going to be good, but it's also going to be a little bad for the Indian consumer. Don't expect low fares, the low fare regime to kind of continue. Expect a gentle climb, but it will be a climb slowly.
I just hope that we get a dip and then a climb. Because, fares are already through the sky, so to speak, pun intended. Yes. But good points there, Devesh. And there are lots of questions we don't know answers to right now. But also that other point that you expect at least one sort of competitor not to survive, to go under, maybe in 24 or even as early as 23. Perhaps, taken over, consolidation, that route. Mayur is back with us. Mayur, sorry, your audio had issues. I hope we've been able to fix it. The one aviation name investors own, they could, I guess, own widely is Indigo. So my question is very, very specific to Indigo. How does this change things at the margin for Indigo, and how investors will view prospects for that company from here out?
Yeah, so I was, so this is the same thing that is highlighting that go to pre-pandemic time, and when crude costs or crude prices were lower, and you would see that Indigo was making a spread, which is your RASK minus fuel CASK, about 2.2. Now, in the last 5 quarters, despite crude costs being so high, they've actually managed to do a 2.4 spread, which clearly tells you that the Indian skies are much more disciplined now. You have a host of professionals, about 25% being managed by the Tata Group, about 55, 56 with Indigo. Then there are about 7% each with, Go Air and Spice. which of course they've seen their market share fading away. But having said that, I would say that as far as the companies are concerned, they are definitely in a happy space compared to what they were 3 years back. And I would expect this discipline to continue going forward as well.
Okay, all right, fair enough. We'll leave it there. Mayur had a bunch of other questions, but we're completely out of time. Hopefully, we'll have you back on this very Indigo-specific discussion later on. Mayur, Devesh, and Mr. Mehta, it's a pleasure. Thank you very much, all of you, for being with us here on CNBC TV18. We'll take a break. Mitesh is going to be back with us. The market's taken a bit of a dip, just 20 points higher on the Nifty. What next with Mitesh in just a bit?
Welcome back. Well, the markets were on the verge of moving to the red, but we're back in the green. We're up 30 points, and that's courtesy Reliance Industries. Pull up the intraday chart. That spiked to the high point of the day, so keep an eye out on that one. Mitesh Thakkar is back with us. Mitesh, how do you approach the markets from here on? And fill us in with a couple of your picks.
Nigel, I've been talking about taking, some profits up because we are slightly overbought, and maybe, if not that, at least trail the stop loss slightly aggressively. We've maintained 18,540, 550 as the support area, so that should be the immediate stop loss, about 100 points lower. And that about, I have a buy on Colgate. I think that's another FMCG stock which is breaking out very nicely. Buy here with the stop below levels of 1610 for targets of around 1675. And the other stock which I like is B Software, Birla Software. I think that's a buy with a stop below levels of 292 for targets of 310.
Mitesh, thank you very much for that. Let's turn our attention now to the commodity space. Manisha is here with us in the studio. Manisha?
Thank you for that, Rima. Well, I'm looking at the copper prices, and what a month of November it has been for copper. It is putting in a best monthly gain since the month of May 2021. So the best monthly gain in this year and in last 18 months as well. Copper prices actually have gained up by 8% in the month of November. And from July lows, that is when the copper prices hit a 20-month lows, we did see the prices gain up by 20% from those kind of lows as well. So the report card should come in on your screens on what copper has done in this year until now. We did see all-time highs in the month of March at 10,845 and then a 20-month lows in the month of July. And November is holding at around $8,000 per ton. So good buying from the kind of lows that we saw in the month of July there. Well, there it is about the supply concerns. You also are looking at better demand expectation from China. Supply disruptions, lower inventories are some of the factors that have continued to support the prices. But majorly, it is about what China has done in sense of measures and a list of that really. To begin with, there are stimulants coming in for construction and industrial activity that China seems to be putting forth. And then China also has lifted ban on equity refinancing for the listed property developers there. China also has extended financial liquidity to the tune of $162 billion in sense of fresh credit lines. China Bank also has cut RRR by nearly 25 basis points. So various stuff happening there, and that clearly has been supportive for the metal prices, especially in last 1 week there. Markets will now watch out for the US Fed, which is likely to slow the pace of rate hikes in the month of December. It also is about the federal Jerome Powell's speech today. That is what the markets are eyeing for cues. And then Friday will get you non-farm payroll data. But take a look on what the metals have done in the month of November. We have seen 7 to 8% of a gain across board there, whether it's copper, aluminum or zinc. And a double-digit price gains is what you are seeing in case of nickel. 17% of gains coming in for that. Tin prices have gained up by almost 26% that. And ferrous metals like steel and iron ore posting November as a very strong month.
All right, Manisha, thank you very much for that. Commodities in focus. Now, some technical changes with regards to index rejig. This is MSCI rejig, which I think the changes were made earlier, and all of it goes into effect today at market close. Vivek is standing by with more. Vivek, hi, morning.
Well, good morning. Well, as you rightly mentioned, the changes were announced earlier. All of the changes will happen in the session today. Just to reiterate, remember, in the MSCI India Standard Index, the index that is tracked more widely, we have 6 additions to this particular index, no deletions as far as Indian stocks are concerned. 44 additions to the MSCI Small Cap Index with 7 deletions over there. So net, India is likely to see inflows of close to $580 million. This as per IIFL alternative estimate. So this number will actually involve all of the inflows that will come in as in the Standard Index, the Small Cap Index, and also some weight additions and reductions that will happen in various stocks to make place for these new additions. So which are the key stocks that are likely to see inflows in today's trading session? Bajaj holding around $132 million. Tube Investments around $207 million. Indian Hotels, similar figure there. ABB India around $108 million. TVS Motors around $176 million. And Varun Beverages around $187 million. All of this will happen in the last 30 minutes of today's trading session.
All right. Thanks very much, Vivek. Appreciate it as always. 30 points on the Nifty, not at the day's high, but not quite at the day's low as well. 18,646 is where we are at. We'll take a break here. Our special segment, Indianomics, is coming up. Lata will get chatting with Dinesh Kanavar of Dhruva Advisors